The last couple of years, inflation, central banks, interest rates, it's been a huge deal. And you could probably speak broadly more to Australia. Is our central bank winning the inflation fight? They just kicking cans down the road? Where were we at? And I will say, at the time of recording on the 8th of July at 2:30 this afternoon, there is a RBA board meeting, and we will know if they have moved or reduced the official cash rate. It's currently sitting at 3.85. Brian, there is chatter out there that there may be a drop of 0.25.
Yeah, certainly the market consensus and market pricing is heavily in favour of a 25 basis point reduction to 3.6. And I think at a time like this, you'd have to say where there's smoke, there's fire. So, certainly that's what markets are expecting this afternoon. Certainly the timing of our recording isn't ideal, but I think that I think one thing you can say is that if rates don't go down this month, then you are still likely to see further rate cuts over the coming months.
When, central banks reduce interest rates, sure, that's great if I've got a mortgage.
Correct.
Because I'll effectively pay less. Not as great if I've got cash savings because I won't get a higher interest rate. But should we be jumping up and down at a structural level if a reserve bank is reducing rates? Because that could be a warning sign of, things need stimulating and moving.
It's a good way of thinking about it. It depends on the level you're starting from.
Right.
I think right now it's safe to say that the economy is holding up okay. The private sector is still quite weak. So measures of private sector demand are still pretty anemic. And so the private sector probably needs a little bit of a boost. The fact that inflation has come down considerably, they have made excellent progress in bringing inflation down. They're not 100% out of the woods yet, but I think from the Reserve Bank's point of view, it's a bit of a balance of risks. Do you wait too long and actually end up having to cut rates further because the economy ends up being weaker than you thought? Or do you give inflation the benefit of the doubt? And do you say, look, I've made enough progress. I'm now more confident that I can keep inflation in line with target. Therefore, I'm going to cut interest rates in advance of that. And, you've got to be careful what you wish for. If you sort of think, I think interest rates are going to come down by another 2 or 3%, in order for that to happen, you'd have a very, very weak economy. That would be pretty much recession territory. So right now I think it's a case of we've made progress, the economy needs a bit of a boost, and so we're going to cut interest rates another time. And that will certainly help consumer spending. It'll certainly help borrowing decisions. So it will provide a bit of a boost to the private sector at the margin. But you're right, if you're relying on bank deposits for your income, it does mean that you're getting a cut in your income as well.
Actually, in the Facebook group, because I did ask people to put questions up if they wanted to chat, Aidan actually said, why is the only lever the government has to address inflation is to increase interest rates, i.e. when bills are getting higher, all we can do is increase another bill?
Yeah, that's a really good way of putting it. And certainly higher interest rates does inflict pain. And, the interest rate lever is really the only in reality, it's the only effective tool governments are willing to operate. In theory, a government could actually come out and say, you know what, we need to rein in spending, we need to tighten things up a bit, so we're going to cut spending and raise taxes. Governments are notoriously unwilling to do that. And so consequently, because governments are not terribly good at using tax and spending decisions to rein in inflation, so much of the burden falls on the central bank to make these kind of tough decisions. Michelle Bullock actually put it well when she said, look, I know high interest rates hurt some people, and she absolutely got that, but she said higher inflation hurts everybody. And I think that's a good way of putting it.
Yeah, that's very interesting. How exposed is Australia right now, particularly around China, or are we actually resilient? Because remember, maybe even 15, 20 years ago, China's growth was like 11% a year or something, and it had slowed down. What's the relationship as it stands at the moment between the stuff we sell to China and the prosperity of Australia?
Yeah, look, there's still obviously, what happens in China and in Asia more broadly is a key driver of Australia's export performance and a key driver of our national income. Let's broaden the discussion a tiny bit because it's useful to talk about our relationship with China in the context of the whole Trump tariffs and trade wars and all the rest of it. Because clearly China is well and truly in the sights of the US when it comes to trade. If the tariff measures that Trump ends up imposing, if they were to severely hurt the Chinese economy, that is not great for us because by implication it means it's going to impact Australia's exports. However, the flip side of that is that if you were to see a significant effect on the Chinese economy, it's highly likely that the Chinese government would throw money at the problem. They would stimulate the economy pretty aggressively to try and mitigate the impact. That tends to be good for us. So what it means is that if you think about the impact of Trump's tariffs on Australia, it's likely to be relatively small and relatively short-lived. Because of that, impact on China is going to be mitigated by government spending and other measures to boost Chinese growth. But also our exports to the US, even the direct impact of tariffs, isn't really that significant. The US only accounts for, it's a single-digit percentage of our exports. So if you whack on a 10% tariff on our exports to the US, it's not really going to be a killer punch for Australia's economy. And a lot of what we export to the US is commodities that we can redirect elsewhere anyway. So it's not that big a deal for us. But certainly the impact on China is a more important channel for us.
Do you think, and you'd obviously read other economists' opinion and views, where are, Australia right now, forget the absolute housing affordability crisis, but as an economy with our debt to GDP, spending and all that, do you think Australia is living in its best days, worst? Is there
it's a good
better to come, worse to come?
I think that we've got a lot of opportunities. I think I would count myself as a medium to long-term optimist about Australia. And let me outline a few things. One is, in a world of geopolitical uncertainty and political uncertainty, our political system is relatively robust. And I think that's a powerful advantage. I think that we are likely to benefit significantly from our resource base over the coming. We already have, obviously, via the boom in iron ore, et cetera, and the boom in China. But if you think about addressing climate change, for example, the solutions to climate change are actually very resource intensive. If you want to facilitate a transition in the way the world produces energy, that's going to require a hell of a lot of metal, and it's a lot of metal that we can supply. We're also a lower risk supplier of a whole range of rare earth metals, for example, that currently come from China. So certainly we're a beneficiary of these sort of geopolitical shifts that are taking place. We do need to get some decisions right. We need to get our own climate policy right. We have to facilitate our own energy transition. We've got to get our water policy right. But I think that I still count myself as an optimist on Australia's longer-term future.
And surely that, this is not really – it's a political statement because I'm literally going to state something political, but it's not a view of who's the better party or whatnot. But, the Labor government have just been voted back in recently. Yep. There's probably another 6 years, another 2 terms in the bag if they don't stuff something up. That's got to be good for Australia to actually get some stuff done because we've got continuity of government.
It's interesting. I actually think that –
I guess it depends if you like the stuff that they're doing.
Well, that's the thing. And also I just think that one thing we've learned from politics globally and here in Australia is that if you think you've got 2 terms in the bag, that is a very, very dangerous mindset because certainly we've seen, certainly at the state level, governments thrown out after 1 term that had a large majority. Queensland being a case in point in relatively recent history where, Campbell Newman was the Premier and he just lasted 1 term and Labor came back from near oblivion to win state government in Queensland. So in politics, complacency is death. But one thing I would say, though, is that if you think about the broad positioning of economic policy, how governments run fiscal policy and how monetary policy is run, that doesn't really change dramatically depending on the colour of the political party in office. There's there's remarkably little difference in terms of macroeconomic policy settings under either side of politics. You can argue, certainly you can look at things like climate policy, for example, and yes, there has been significant differences over recent history. But in terms of the broad macro settings, it's not. That's why, from my perspective, I, as an economist working for a major super fund, I don't really pay a lot of attention to what's happening in federal elections because it doesn't really change investment strategy or our long-term views of the world.
Yeah, and I think it's really important to note that if you step back and the budget episode I did earlier in this year when I talked with someone at the AFR, I think Mike Reed, we just literally looked at the Treasury numbers to see the debt, the expenses and the deficit, remove whatever political party is, and that gives you the real facts of what's happening.
Yeah, and one thing that's pretty clear, firstly in Australia, if you look at our debt and our public debt, our government debt and the size of our budget deficit, is it ideal that we don't really have a balanced budget at this point, or that we still have a structural issue with our budget deficit? That's certainly less than ideal, but we're not on our Pat Malone. If you look at most other comparable economies or most of the major developed economies, pretty much all of whom have or are running larger budget deficits than we are and have larger or higher levels of public debt than we do. So when it comes to, if I'm a global investor and I'm looking at sovereign debt risk, I'm looking at the magnitude of fiscal imbalances, for want of a better description, around the world, Australia doesn't really doesn't ring anywhere near the kind of alarm bells that you might get in the US or elsewhere.
Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.